Pretty good. Pretty decent.
Good. So just to catch our audience up, this is Keaton Schultz, one of my good friends, business partners, and I would actually call him a real estate extraordinaire in terms of real estate. Yeah, someone as young as you are doing as much as you've been doing. Just to give our audience some background, I think it'd be fun to kind of talk about how we met. So is that okay if I do that?
Yeah, let's do it. Yeah.
So how long ago was that? 5 years?
Yeah, I know I couldn't drink yet. So
Wow. Okay.
yeah, I was probably 20.
Okay.
Probably 20.
Okay. So here we are. Keith and I get invited to this self-improvement 3-day seminar in San Diego. I guess we could call it that. Invited by a mutual friend. And I get down there and, you're engulfed in these trainings, right? But at some point, I can't remember if you instigated it or if I did. It was probably you, but you called for a lunch. We're having lunch in this really nice little restaurant in this kind of cute boutique hotel with, I just remember flowers everywhere and it was really green. I mean, San Diego's this kind of beautiful area, right? And Keaton calls for this lunch. And I remember the first thing you gave me was a book. And I'm like, who is this kid? Who's a 20-year-old punk who already has a book written? And the topic is how to invest in real estate. And I'm like all my beliefs around like how fast you can get something done. I mean, especially for our young listeners, it was kind of confronting, but also inspiring at the same time. Like, oh my gosh, there's this guy that clearly knows what he's doing. And, I took it at face worth, read some of the book, but I don't think we did anything real estate wise for like a year or so after, right?
Yeah. Yeah, it was something like that. Because we went to another conference, talked a little bit and whatnot. And yeah, it must have been at least that.
Yeah. So over time, Keaton and I got to know each other. We jumped in. I'm trying to think what our first project was. Was it one of the motels? Or maybe it was just like it might have just been a small fixer-upper.
Yeah, it was.
Yeah, I think it was.
Yeah, 1129. Yeah, it was a small duplex. Yeah.
Yeah, and give these guys, because we're going to jump into this, but give these guys an idea of like how good you are at this, because I think that first deal we did, like, you don't have to be exact, but what do you think was the purchase price of that first deal we did?
I think that the thing that's weird with me is I remember all this stuff. So we bought that one for $24,000.
$24,000, and that was a single unit.
That was a duplex, upper lower.
Yeah, so 25 grand. We're in 12,000. Call it 13 to round up for each unit. And I'm having my mind blown because I'm in Utah. If any of you guys are in like California, New York, some of these bigger metropolitan cities, it's like you can't buy anything for $12,000. Like, yeah. Anyway, so he caught my attention. Obviously, he was finding these deals, and we ended up doing this deal. I think it's still one of our units. We never sold that, right?
No.
Yeah, and so we've got a positive cash flow on the rent. And after we did that one, I was like, you know what? I got to start doing this with Keaton. And so I don't know. I should have prepped for this a little bit better and like actually counted how many doors we have together. But if you had to guess, just between us, like just in our partnership, how many doors would you guess we have?
Probably at least probably right around 100.
Yeah. So right around 100 doors between us. And to just give our audience an idea, tell us a little bit about like doors total for you. I know you've gotten into the mobile home park. I think our audience would love to hear about that. But like, how many doors are you at now? Mobile home parks, other real estate ventures that you're up to, just to give these guys an idea of how much you've done since you were 20 to, I'm going to guess, 25 now?
26.
26. So
yeah.
Let's call it 6 years.
Yeah. So I started buying places when I was 18, got my license and did that. closed on my first place with a land contract on my birthday. And then like around 2019, 2020, then I bought my first park, and I didn't really like the industry, but that's what's been able to get my unit count up quite a bit. Because the price for parks is still relatively really low for unit count. So with apartments and parks and whatnot, I'm over 4,000 units. And actually, we just came back from North Dakota because we bought a park out there. So it's easier to get unit count up, and and I like being diversified too. So having parks, apartments, commercial, just like what we have, are like out of the 100 units, there's a little bit commercial inside, a little bit of low income, stuff like that. So it's pretty well diversified. So
yeah, that's great. And what's unique about, I mean, Utah's a little different. We'll talk about this, but Wisconsin, even as we looked at the map a little earlier today, has weathered both the climbs and the declines. It's a pretty stable market.
yeah, the thing that I would say about like Wisconsin with other states is you're not going to have the high appreciation with you'll have the appreciation with rents, right? But then the massive inclines you won't really have. And that's you just have to know that going into the market. You can have that in Madison and Milwaukee depending on your areas, but like where we have stuff, central Wisconsin, you're not going to have those big swings, which is a plus and a minus, right?
Right. I get that. Yeah, cool. If it's okay with you, and that's I love the highlights, by the way. I'd love to jump in to some of the stuff. Like there's been a lot that's been happening this year, a lot that's been happening even in the last couple of weeks. And I think our audience and myself especially would love to get kind of your take, being on the other side of the world, so to speak. Utah is kind of a weird market. We got cooked. Pandemic, people I would call even fleeing California, were just flooding Utah. And it was already happening. We were already projected to have like 30% growth in Utah. And the pandemic just escalated that. And these people from California just had so much equity, so much money in their homes, that to buy $1 million home here got them twice the square footage in a lot of cases. And so Utah, we're overcooked more than most states, I would say. I've looked at like some of our surrounding states, Vegas, Arizona. I would say they're more overcooked based on like tourism and Airbnbs. We'll talk a little bit about that. But I want to jump right into it and get kind of your take on it. And what I'd love to hear from you first is there's all this hype, and I'm just going to bring this up really quick. There's a lot of hype on this topic right now. This, let's see if I can pull it up this way. This Airbnb topic. And here's just a chart that I pulled up. This came up last month. Mm-hmm. And the news and social media is going crazy on it. Everyone's got this, what would you call it? Everyone's always looking for the doom and gloom, I would say, right? In the market, it's how you get clicks. It's how, even on our channel, like if I talk about everything that's amazing, no one's going to subscribe. Everyone gets emotionally triggered by the negative things happening in the market. Well, this is real, right? Neither of our states are listed here, but you can see some of the states that are being affected by the Airbnb market. I'm curious, like, what your thoughts are on this, why you think this is happening, and kind of where do you think it's going from here?
Yeah, so part of it, I think I've looked at a lot of Airbnb models, and I've personally never done it because like I've done a lot of motel stuff, right, and just the transientness of those tenants and all that. When you look at this, it's not super surprising because it seems kind of my thought with some of these markets, it might not be so much that a lot of people aren't traveling there as much. It could be that it's just over inventory and just a surge of inventory because everyone's doing it.
Yeah.
And that's like, there's when you open up something on social media, there's something on, I can get you an Airbnb without buying a property, do a lease, and then, have a master lease on the property, or buy a property and then do that, or
What do
mother.
you think drove that? What do you think drove this? Because I would agree, like there was like a massive movement into Airbnb properties. What created that demand? Like what was going on that you think created this? I mean, because obviously we weren't at negatives. Like people were renting these out. They were getting what they were asking for, and now the revenues have dropped. So something was going on clearly the last 3 years where people were renting Airbnbs a ton, and something has shifted.
Yeah, I think like my personal opinion on that is it did stem a little bit from COVID, of people being, boxed up, and then they want to just go do something, and they had disposable income, they had stuff and time, because there was still a lot of work from home stuff. So it's like, well, hey, we could go down to Austin, Texas, we could go to Denver, rent an Airbnb, and we're good to go.
Right. And a lot of the
Just from
national bans. Do you think the national bans had to do with it also? Like not
yeah,
allowing people to leave the country because of COVID. Everyone had to staycation.
100%. Like, you can't, there's a lot of people I knew that had their days off, but then they couldn't leave the country. So then it's like, all right, we're going somewhere else in the country, we'll do a road trip. I mean, same thing happened with RVing too. RV sales just went through the roof. Just same thing with MH too. Especially during COVID, and that part of that was too, is supply chains. But I would be curious on this to know what the supply is per market as well, because your revenue is decreasing, but what did the supply do? And I would bet in a lot of those markets the supply kept going up.
Interesting. Yeah, like let me go back to it actually. The two markets that stood out to me the most, I highlighted, and it was Phoenix and Austin. So Phoenix, Arizona, Austin, Texas, where you have plenty of inventory, plenty of homes, but people were buying maybe second homes, third homes, renting them on Airbnb because people were staycationing, coming into the state to rent, and kind of a bubble market. And maybe what we're seeing, maybe these negatives are just putting us back to normal, is how I would see it. Maybe we just had an insane amount of demand for these, so the market reacted, but wasn't thinking like, oh, like RV sales, like you said, it's like, oh, we're probably gonna have to go back to work someday. Oh, we're probably gonna have to go back into the office someday. Oh, I mean, I have so many friends that during the pandemic were like, oh, peace, I don't have to work at my office anymore, so I'm gonna take a week at, and in fact, Phoenix was one of the areas. I'm going to go to Phoenix for a week during the winter and work, whether they were working or not. I'm going to work on my 1 week stay out there and then go play on the evenings. I mean, Catherine and I just got back. We actually did this, but for reals, like we actually worked. We went to the Redwoods, Northern California for a week, worked during the day, and then in the evening, went out and did our thing. And the Airbnb market, it was cheaper, and it's cheaper for me to do that than it was for me to get a hotel. So anyways, yeah,
sometimes it's more
thoughts
fun
on this
too.
before we move on.
My only thought is just what did the supply do? And especially with a lot of those people that have programs online that are saying, hey, you can rent an apartment, have the security deposit, and then have an Airbnb in place. There's, like, in those markets, there's a lot of apartments being built. There's a lot of new construction, which then if that's a model that people are going on, then that would help increase supply too. So that'd be my only thought with that, is what did the supply do?
Yeah, I agree. I want to bring up this. I mean, I have so many topics I want to ask you about, but one of the ones I want to bring up is one that I sent around this. think I've got this link here somewhere. Let me see if I can pull this up. This really unique opportunity. And I'm just curious if you're seeing it this way. I'm always interested in investments. I find myself a little more shy than I was the last 3 years for whatever reason. And there's this kind of buy or build thing that's happening in the market. And I found this article that was put up I think this was 30 days ago, where GoBankingRates.com put out this article of 18 states where it's cheaper to build than it is to buy. Like, and that blows than what I could get a 10-year-old home. And so I'm like, in your head, if you help our audience understand, like, is this been? And I'd like to look at, because I think Utah low, like number 4, but again, Wisconsin wasn't even listed here. What are your thoughts on this? Are you seeing opportunities to versus buy right now? Opportunities and people should be gravitating or looking at now? Like,
Yeah, so there's definitely some markets that if you build, then it's going to be cheaper, and some of that supply is there too with what you can get for the rents. Like in some areas in Wisconsin, we looked at building basically during COVID, and lumber prices were just insane.
right.
And then now, like, there's one small development. I have a meeting with the municipality today, actually, and the builder that got us the lumber prices, he's like, well, the price came down basically 75, or it would have been 50, or it's now 50, but it would have been during COVID like 150, 160 for just the cost of putting it together. So now it's like, I think there's a lot of stuff that goes into that when they're saying that. Like, if you're buying older product, there's the repairs and maintenance that can definitely sneak up on you if you're not just like self-managing. If you're a standalone owner that just has, not just, because if you have 10 units, that's impressive.
That's something. Yeah, that's something.
Yeah, 100%. And you can make a lot of money. There's people that I know that have 50, 75 units, and the guy that has 10 is making more than them at that. But there's a lot of costs that go into that on why it would be cheaper. I think the repairs and maintenance, just the lease up period alone, how attractive the unit looks. Like yesterday I was in North Dakota. There's a lot of new construction in some of those cities, especially right on the border of Minnesota and North Dakota. And some of those apartments, you can really tell that if it looks super nice, yeah, it's probably way cheaper than buying current product, and it's also nicer.
Yeah, I think I'm going to share this for our audience. Here's something that I think you're highlighting. So this is trading economics. This is a chart that shows lumber prices currently. And you can see exactly what you're talking about. Like, lumber prices, even from a high, like I was seeing this, the high in 2018, and obviously we had this dip in the late 18 all the way into 2020. We had this just bizarre spike in lumber. And I don't remember a lot of the politics that was going on, but there was this thing in Canada that was going on where they were kind of, going on strike for the rest of supplying the wood for the rest of the world, specifically the US. So we definitely saw some spikes because of that. But I mean, to go to $1,500, and I don't know, I should know this better, but I think here it is. It's based on 1,000 board feet, I guess. But to go from 1,500 to, previously 250, I mean, what is that? That's that's an insane climb. That's 6 times the price. Mm-hmm. And I get lumber. I was talking to one of our big builders here in Utah, and he's like, yeah, but you got to get, lumber. I don't remember what the figure he said was, but lumber only makes up X% of like the building costs, right? You got like cement, you got windows, you got siding, you got roofs. The lumber is really kind of the smaller percentage, but other costs during the pandemic did this also. Maybe not 6 times the price, but we saw appliances go way up. We saw windows get really expensive, even to the point people couldn't finish projects and they were having to sit and wait for supplies to show up because just demand got so high. And then we saw the pandemic. You can see that, kind of here where this drop happened. And then right after the pandemic, we stimulated things and it almost went right back to where it was. But currently, it's not back down to 250 or 280, 580, right? But it's still way better than 3 times that when we were at the peak of the pandemic.
It's
So
palatable.
What's that?
It's palatable, at least. At least you can do something with it.
Yeah, and I'm wondering if that's what's leading into this. I wonder if that's what's leading in to the markets reacting and certain markets being cheaper to build is, yeah, it's not amazing, but it's like, oh, we can do this. And if I can lock in a lumber price and I can lock in my other costs for building right now, I know that I can get the same house, same square footage, but brand new, 20% less, not all, but in some of these cities that we're seeing, in the 18 of these major cities out of, obviously there's hundreds of metropolitan cities in the US.
Mm-hmm. Well, now you also have massive appreciation in rents, right? That now that helps justify those construction costs. Because before it's like, okay, I could build these string of townhomes and I would have to sell them because the money, especially, during COVID or slightly after COVID, it's like you can't hang on to that dollar amount and make it profitable.
Right. Yeah. One of the projects that we're working on, we're doing an expansion, right? We're looking at adding units to an existing property, something that we already own, right? We're not building from scratch. We've already got, I don't know how many, what is it, 30 units or 20, 25 units there?
Like 30 or 32.
Yeah, so we've got just over 30 units there, and we're adding a bunch of units. And from a build to buy perspective, it makes a ton of sense. Are you seeing a lot of that where you're at right now, or is that kind of a unique project?
Yeah, that one's a little unique in that the property upon acquisition cash flowed and there was excess land. So then you have no basically land acquisition cost. So then it makes a lot of sense. And especially because all the plumbing, electrical, and water lines are to the size to where it's good for around 80 units, or it can supply that without having a hindrance on any of the mains. So I think that's a little bit more of a unique property because everything, especially with how it's running straight through the middle. And there's already T's in the line. So it was kind of plotted out for that. So that one's a perfect project to do that. But I think the thing that's unique, even more unique about that one is just the municipality being very cooperative with providing that and then giving funding and whatnot. So that one's definitely a little bit more unique. Because what I'm seeing is land cost hasn't really come down. So building costs are coming down, but the land cost really isn't.
Right. Why do you think that? Like, what's going on? Like, why hasn't that happened? Or are you predicting that that's going to correct on some level?
I mean, it would definitely help development. What I'm seeing, especially like around me, is there's TIF districts that are being constructed to help with that gap. Because that's the whole point of what it is. But those gaps now, like in municipalities where you used to hear that, hey, we'll participate on like 10%, 5%. Now some of them are participating upwards of 20%. To help fill that gap. And then normally it's upon land acquisition. So do I think it's going to come down? It might, but probably not, because this is where people are at. And a lot of the people, again, I'm just speaking in my areas that I'm buying, they're older, they have the basis in the land, they don't need to sell it because it's paid off, or
Right.
they have other assets that are paying for it and they want their price.
Right.
Will some market contractions change that? Possibly. It definitely could.
Yeah. Well, I want to jump into the meat and potatoes. We're about this goes so fast every time I do this, but we're about halfway through. And I wanted to bring up what my viewers enjoy the most, and that's getting the US data. Big disclaimer before we go into this, guys, this is not reflective of your city or your state, but it is inclusive, meaning that your city, your state does in fact add up into these total US numbers. But just because this chart is showing it doesn't mean this is what's going on in your actual area. And there's a really great website. I'm going to do a plug for someone at the end of this, but there's a really great website if you're like, well, what about where I live? What about my city? What about my state? Keith and I will kind of go through that with you, but I want to go through this chart. And since I got you on with me, Keaton, I want to get a sense of like, if you have any comments around this, if you have any thoughts. But the first we're going to start on is median list price. And this is total US data. So I get my data from Realtor, just so everyone knows, my credits are here. So realtor.com actually provides me this data. I get it before most people. We report this month's a little late because the second Friday ended a little late. It's actually the latest Friday we could have this month. But typically I'm reporting on this before most articles. Most articles are like, and I don't get why that is, but they're 2 weeks, sometimes a month behind the data. It just drives me nuts. But anyways, we're here, we're live, and this is last month's data. So you can see the very last data point for mean listing prices in the US is right here. And I think we're sitting right at $445,000. And I'm curious to hear your thoughts on this, Keaton, because we spiked right on the same month, same time last year. And then after that, we had this drop into the winter last year. And I'm curious, I mean, one, it looks like we're back. Like any type of drop we had nationally, we've come almost to par with. Is this a seasonal thing to you? Do you foresee seeing a slight drop? I mean, typically we see these like patterns where, around July, you see like a slow decline. July, you see a slow decline in prices. What's going on in the US and why does this happen? And what's your prediction? Are we going to hit higher highs? Do you think we're going to see a fall off during and towards the winter months? And like, in your opinion, why does this happen?
Yeah, I think so first to point out the decrease in the winter, that's what I've seen ever since I've been in the business. Everything slows down in the winter. People have heating costs, especially in the Midwest, that they don't want to pay for those utilities, especially if they're moved out or it's too much of a house.
Do you think it has to, I mean, we have a weird saying in Utah. It's like once the grass turns green, people are like in a mood. Is there like an attitude towards buying in the market?
Oh yeah, I've noticed that when we've been selling single family homes to manufactured housing all across the board. There's weird things that'll affect it in certain markets, right? It's like during 4th of July and whatnot, we'll barely sell anything. Yeah. And then when everybody's back in school and it's after like September 1st, then we'll have a pretty big spike in purchases.
Interesting.
And most of those people, it's because they're going to school or something like that, and they're preoccupied with their time. I think why it's shooting back up is what we're seeing in manufactured housing and stick-built housing across the board is just an undersupply for the relative demand per market. Even in small markets, like tertiary markets that people wouldn't focus on at all, there's still large demand for some type of housing. And that's why there's even in the manufactured housing space, we're trying to push out more and more homes because that stuff is selling fairly quickly. Same thing with stick built. That stuff is, at least in my area in Madison, in most of Wisconsin and in North Dakota and Minnesota, it's selling very quickly. I mean, all of our new product that we've put on, that's been selling quickly. And it doesn't really matter the market so much. I mean, we could probably point out like one or two, but I would say that that's an outlier in comparative to the whole grand scheme of things.
What's the culprit? Is it rates that's causing this? Is it rate hikes that's causing the demand spike? I mean, obviously, I was looking at unemployment. We're still at like record numbers when it comes to unemployment. Just the demand for jobs is still there. Even though we saw a slight increase in unemployment, very slight increase in unemployment. Like what's the main culprit? Like, why are people just not selling? Are they like staying in their homes? Is it because we're not building enough? Is it because of the cost to build versus to rent? Like, what would you say the main culprit is, at least in your area?
Yeah, so I'll give kind of two opinions on that. One on the investment side, and on the retail side, when rates went up, everyone, at least in my office and my friends that I've talked to that are in the business, we were like, okay, everything's going to slow down, because if we're selling something like on the manufactured home side, now they're in 10 plus interest rates. If we're selling single family homes, it's like now they're not at 3%. The money's not free anymore. So we thought it would slow down. It really didn't, like really at all. On the investment side, I've seen it slow down quite a bit. Now seller expectations are still pre-COVID numbers. But you can't, if you buy a property with all cash, your return is going to be your cap rate. So you put debt inside there, your return is going to be better, but the cap rate still stays the same. So you need that spread on your cap rate versus your interest rate, and it needs to be your cap rate and your interest rate. And right now we're seeing kind of that inverse to where it doesn't make sense. So like
From
my
an
friends,
investor
I know that were
standpoint,
closing, exactly. They were closing deals all the time. Now they're not, but we're not seeing that on the retail side quite yet. What I've seen just looking over applications of people applying for stuff is they still have a decent amount of cash.
Well, and we've seen rate, what was it? Employee wages went up, I think 3.5% year over year. And so, yes, it's not keeping up with inflation, but people are making more in this country. And so I wonder if that's helping also go, okay, yeah, the rates have gone higher, but I can afford more because my job gave me a raise, or I got a new job somewhere else, or something of that nature.
Yeah. I would say that definitely has something to play inside of it. And people are still, even on like the low income side, when we look at those applications and we get proof of what's in their bank account, there's still, it's not what it was like when I first got in the business, where it's like, hey, how are you going to come up with your security deposit? It's like, okay, you're coming up with your down payment on your house. They're finding a way to still do it.
Right. Yeah, and when you don't have options, it seems like there's a lot of cash on the sidelines right now, and the people that have homes, they're just holding.
There still is. We're still getting people on the rental side of the business. We're still getting people that are applying for state aid that are getting, their rent is $850 and they're getting a year paid up front. We like that, but it's like I'd tell the guys, I'm like, keep paying your taxes. Not that you have a choice, but it's like, that's where it's coming from.
Right. So I'm curious about that, because we never really went through a rent moratorium, or like I don't know what they called it out in Wisconsin, but we never, our governor wasn't that crazy. We never had that moment where it was like, oh no, you don't have to pay your landlord for a year. You don't have to, we never went through that in Utah. Did you guys experience much of that out there?
Yeah,
Is
we
that done? Are those all those lifted at this point?
yeah. From every state that I'm in, we're in like 7 states. That went by fairly quickly.
Okay.
There's
So this isn't that. So this isn't, none
no.
of this is from that. This is all already after the fact.
Mhm.
Huh. Okay, I want to bring this chart back up just because there's a bunch of tabs my viewers like us to go through on here. I'm just going to click through some of these pretty quick. Keaton, if you have anything you want to jump in on as we do this, just let me know. Um, this is an average listing price in the US. Obviously, we had a major spike this year in average listings prices, and we actually hit a new high. We're floating at a new high, and I have been trying to understand this. Part of me thinks that some of the higher end homes sat on the sidelines. Part of me thinks that people were a little shy about their listing price after we had kind of a settling in the market. But the listing price has gone up and we're at new highs. Like, I don't know if we're ever going to come back on this. Any thoughts on this chart before we move on?
I don't think we're gonna come back down for sure, because it's still the supply is still there. I think we'll hit equilibrium at some point, but still there's multiple like news articles about how the supply in certain markets is just vastly down.
Right. It just doesn't exist. This is an interesting chart, guys, by the way, for our listeners. There's some things that just don't make sense. And one of them is pending ratios. We're going to talk about, like, this is to have average listing price at an all-time high, but the pending ratio is starting to drop. It's like, we're not in the demand during COVID that we had, but we still have less listings than demand for like the market is demanding. And I think maybe that's what's driving the listing prices up.
I think a popular thought with that is, if I'm going to sell my house at a high point, am I going to have to buy something at a high point as well? And I think most people's consensus with that is yes.
Yeah, that would be a fun thing to do maybe next month, is to bring up a chart and go, okay, you bought your house, X square footage, here was your rate, and today you're just going to buy the same exact house somewhere else. What's the difference going to be? It'd be really fun, I think, for our audience to actually, because I would say most people don't even experience it or know what's going on until they almost get to closing. And they're like, well, now here's your payment. Now that you've met with a loan officer and you like actually understand like the interest rate difference. And I would say most people don't have no clue of that before they even go into looking for a home. They just start looking for a home. Oh, I'll just buy something at the same thing, the same price. But really, it's a downgrade now, where in the last 5 years, with interest rates dropping, if someone was in a higher rate and was going to buy a new home into a lower rate, it's like, oh, I can get a couple extra 100 square feet, or maybe I could get it in a nicer area because I can afford more home.
It's funny the narrative that's played when whoever you're talking to of what their benefit is. Because if you talk to like a loan officer or a real estate professional that wants you to buy, it's like, well, all the people that are sitting on the sidelines waiting for the market to crash, now it's like, now's the best time to buy. Yeah, there's increased interest rate, but then they have this, I'll try to find some of the graphs, but they're very misleading in some markets, where it's like, okay, in some markets it doesn't make sense to buy right now.
Right.
Really at all. And interest rates historically, the interest rate's fine right now.
Right.
But again, in some markets, if your goal is to lead with a good financial sense, then some markets it doesn't make sense. But some of that's personal stuff too.
No, that's a great point. And again, just another reminder to our listeners, this is total, what we're going over is total US counts and numbers and data. Like every metropolitan area, and we'll talk about this a little bit at the end, can be radically different. There are certain cities right now people are fleeing from that would just be a bad place to buy in general, like forever. And then there's some areas that just naturally are growing. There's industry, the population likes the area, and so people are constantly moving in. The projections are that it's going to keep going up. And in the real estate market, it doesn't matter really what's going on nationally if the demand into that metropolitan city is really high. Like you're just going to keep having higher prices because we're talking about land. There's just, you can't make more of it, right? All right, so price increase count. It's an interesting chart. I don't spend a lot of time on this because this is homes that list and then increase their price after. Obviously, we saw a spike this year in increase. So there were a lot of the amount of homes that did increases dropped, but then beginning this year, it started spiking again and leveling off. So I like to see this as a demand chart. It's more like, okay, people are still increasing the price of their home compared to listing. They're getting more in a lot of cases than they were asking. So we are seeing some of that demand still in the market, even post-COVID. Price reduction count. This was an interesting one to see also. We've seen in the last 3 months more price reductions than we did the first 4 months of the year. Nothing like what we saw in 2018. We saw a huge spike at the end of 2022, which was like, again, the winter. I'm curious, as you said, Keaton, there's kind of a cool off during the, probably from next month into winter. Do you think that this trend will continue? Do you think we'll see people who listed their house for way too much, was hoping to get COVID's numbers, from 2 years ago? Do you foresee that these people are going to finally wake up and start lowering the price of their house to the actual market price? And will this chart go up?
Yeah, I think my comments might be a little pinpointed, but I think some people are looking at what their neighbors sold their house for, and they're researching that, and they're not taking into account at that point in time what were interest rates, what was the market like, what was the inventory like.
Right.
And now all these people, fear of missing out is a real thing. So all these people are like, well, Steve sold his house for 500 and my house is better, because that's everybody's perception.
Right.
So let me list my house for around the same price. Well, yeah, Steve sold his house when you could secure an interest rate at 3%.
Right.
So it's like that he did sell his house at the market high. So now those people who need to sell, who maybe have an offer on the next house, who are moving for a job, some massive consideration.
Right.
Now they need to sell, and they know if they get beyond September, at least in the Midwest, for example, market definitely slows down. There are definitely less houses that sell in the winter than that sell in that early spring to summer months. For sure.
Yeah. So we'll probably see this you can kind of see the pattern. It's winter. COVID was weird, but little winter. And so we'll probably see this spike up also again, just because people are just waking. I think, like you said, I would be interested to know, the data doesn't show this, but I would guess that these are higher end homes. These are homes that are, in at least Utah, probably $1 million plus, where people just had this illusion of like, oh, I can sell my house without even someone looking at it. COVID was crazy in Utah. People were buying homes from California based on the pictures they saw, and asking prices way above. So those days are done. That was a very unique market. And I think some people are waking up, like you said, they just can't get what people were getting 2 years ago. That was crazy.
It'd be cool to see that graph with the range of price points.
Right.
That would be very interesting.
Yeah. And I'd love to be able to get that data. Unfortunately, I don't have that for the US. Median list price per square foot. I like this chart because it does what you're saying. It takes the median list price based on the square footage. Looks like we are right back to where we were last year. So any declines, we had so much market news and people using doom and gloom, clickbait, like the market's going into a crash, real estate market's going into a crash. And it's like, well, we're right back to where we were. So that clearly hasn't happened and isn't happening. This is the one that I watch, and you can see I mean, it's crazy, right? We've had growing markets. 2018, market was growing. 2019, market was growing. 2020, market was growing, meaning the value in most areas, most homes in the US were going up when the pending ratio was less than 0.5. COVID hit, pending ratio went through the roof. And by the way, pending ratio has to do with how many homes are listed versus how many are sold. And we're still not back into normal territory. Like I just don't see how prices don't keep going back up until we get to at least where we're at 0.5. To go into a housing market crash or recession, like a lot of people are warning, this is a chart that I would be looking at. It has to go below zero, which means you have to have more homes being listed than are being sold. This shows, with this chart being above zero, this shows that the housing inventory is still disappearing. We have less and less homes for sale nationally, and the inventory just keeps going away. What are your thoughts and comments on this?
Yeah, I think that the result of this is a lot of the stuff that we mentioned in some of the other graphs, that has a lot of stuff to do with supplies, or the impact of that has a lot to do with supply. And there's less stuff being probably all types of homes and price points being listed, but the inventory is still very, very low.
Yeah, this I think points exactly to what you're talking about. This is the new listing count. It's like this is a bad sign. And I mean, bad sign if you're trying to buy your first home. Great sign if you own a house, right? Great sign if you own a bunch of real estate, because new listing counts they hit the record low last year, and are creeping into that. I would imagine, you kind of follow the pattern, right? Spike, drop, spike, drop, spike, drop. These are seasonal. And it's like this winter, we're probably going to drop even into lower new listing counts than we've ever seen in this country for the last, this data goes back almost 6 years. Same with active listing count. Active listing count, we're used to seeing active listings in the country over, 1 million. We haven't got out of this 500,000 range. It just hasn't happened. And so there's an old saying with inflation, right? When inflation's happening, the people who get hurt are the banks, and the people who win are the people with assets. And so gold, silver, I have a bunch of friends that are touting gold and silver right now, but real estate is an asset that is a strong hedge against inflation. And I think this is showing that. This is proof that it's at least keeping up with inflation. Going through, I just want to go through the last of these. This total listing count. Obviously we're seeing the downtrend there. Pending listing count. Now this is a valuable piece of data nationally in terms of like how many houses are pending. And we did see an increase in sales. But again, this number is based on the last numbers. If you don't have listings, you can't have a lot of pending listings. So I would not write an article on this chart by itself, right? Because it's dependent on other factors. And then median square feet. This was the one that I thought was unique. And again, you remember that chart we were talking about with, what was it? Median list price. Was it median list price? Or was it price reduced? Yeah. It was like, well, what category of homes are getting reduced the most? I think this might be the answer, Keaton. I think this, which one was it? Median days. No.
Nope, MSF.
Oh, yeah, MSF. This is showing that the average home size that's selling has spiked.
Mm-hmm.
And COVID, I don't know if you have an explanation for this. We've always been interested in small homes with you, but what happened here? Why in COVID did we have so many low-end homes sell? Like what was the reason in 2021, 2022, what was selling the most were smaller homes. And now we're starting to get back into that new territory.
Yeah, that I have no idea. And that's really, really interesting because, back when we were talking on the other graph, it's like, okay, there's more price concessions, more price reductions. What's causing that? What type of home is that? And my head kind of went to it's the larger homes. It's the 500 in the market that's normally at 250,
Right.
something to that extent. And I think this is showing that exactly because you compare this up with the graph of what's the average cost per square foot, and you're seeing that.
Yeah. I'm curious. I mean, the Airbnb thing that we brought up earlier, those type of purchases are usually condos, smaller homes for rentals. But I did some research, and that entire market only makes up 0.8% of the entire real estate market. And so it's like, well, that wouldn't have a lot to do with this. I wonder if people were buying second homes that were small. I wonder if people were just nervous of buying something big. And so everyone kind of gravitated towards something smaller during COVID. Like, I wonder if this was just a psychological reaction to the pandemic.
It's an interesting thought, and it definitely could be. I know anecdotally, a lot of my friends have purchased second homes in Florida and whatnot, especially around the COVID time. 100%. I think a lot of that had to do with more free time looking. I mean, just like what we were talking about a little bit in the vacations and traveling a little bit more.
Right. I want to bring this up. We've only got a couple minutes, but I think this is a good segue into the next piece that I have here. I have this site that I really enjoy, and I sent you a link if you want to look at it with this beta site that's running right now. There's a guy on YouTube I follow who does all the marketing for this site, but Reventure is what the app is called. And I find myself playing on this app a ton because, I consider myself a pretty well-educated investor. I'm not in it like you are. No expert in multiple regions like you are, but I do a little bit of investing in Utah. I do a lot of bit of investing with you out in Wisconsin, and then I've got another guy who does like 3 other states. And as you play with these filters on this Reventure app, I saw some really crazy, this over and undervalued thing that they built in. I thought was really fascinating. The more you get into an overvalued, you start to see the highlights. And it's interesting to see, and for our viewers, just watch the map and see what happens to your city and your state as we move into more overvalued, because you'll get a sense of, like, compared to the rest of the country, where I bought, was it way overvalued or undervalued? And so let's bring it to at least 0. So we're talking about anything overvalued. And it looks like most of the country, right? So I think, I don't know exactly how they calculate this, but it has something to do with the mean income for the region and the cost of either a mortgage or rent. That's how he's creating this over undervalued thing. So I don't know how, it's obviously his own tool. Whether or not that's a great tool, I don't know, but you can kind of get a sense of, like, okay, where are the best places to live based on income and cost of living for a house. And you can get a sense of where the most expensive are when you get really high. Oh, what is this? Oh, Wyoming, Jackson Hole. Yeah, I mean, so these are like high level vacation areas, right? You got Edwards, some parts in Florida, Tennessee. But as you start to, like, come off the overvalued section, you start to see areas like we've been hearing a lot about. Arizona is getting hit, Florida, Utah. So it's really interesting, but the northern parts of Utah got cooked for some reason. I'm also concerned about St. George, which is like the Cedar City area, which is the southern part of Utah. Idaho got cooked. Everyone just left California. Notice how, like, California is not showing up anywhere right now. And it's because, like, everyone went here and moved inland. But Wisconsin, it's like nothing.
Yeah.
You're still in the clear at 28%. Let's try 20%. So 20%, we get a lot more activity. Wisconsin, you're still, what is this? Freeport? Oh, that's Illinois. Green Bay. So you got Green Bay in the blue, though. It's on the lowest end. So it's like barely overcooked, but really nothing's overcooked here. What are some of the other states you're in?
Minnesota, then Illinois, Dakotas.
Yes, I mean, you can see some stuff, but it's pretty light. I mean, just in general, pretty light through this area. Some stuff in Minnesota, but it looks like more, I don't even know what, I mean, I've never even been to Minnesota, but like Rochester, Bernard, how do you say that? Brainerd?
Yeah.
Yeah.
Yep. Yep.
But this is a really cool tool, and anyone has access to this tool. It's completely free. One of the things you can also look at is like sales inventory growth. So if you're wanting to see like year-over-year growth, like this is like hundreds of percents. Let's go to 0 and look for any growth. And let's start at like 10% growth. Whoa, the scale moves fast. But you can see like most of the country has had insane sales inventory growth. I mean, 30%. You start getting up into the higher percentages. You know, we could even say like, okay, I don't want to look at anything that's at least, it's got to have at least 50% growth year over year. Utah's off. Wow, Utah's completely off. But Florida, so these would be like maybe the areas that are still cooked, still moving, still hot, parts of Texas. So people are definitely moving. Maybe in the last year to Texas, some people look like they're moving to Florida. Some hot spots in Nashville, Tennessee. Yeah, anyways, really interesting chart. And you can play with both. You can go, oh, I want to see year-over-year inventory growth, but I also want to see the areas that are overvalued. Or maybe I want to see areas that are undervalued because I want to move somewhere where I'm not getting ripped off. You know, I want to move somewhere where cost of living is cheap. Well, there's not a lot of that. There's some, what is this? You can move to New Orleans, I guess. Yeah, interesting. Anything? We're there, Keaton. Before I have you sign off, just want to thank you for spending some time helping our viewers get a better picture of what's going on in the market. Hopefully, guys, this helps you make whatever your next decision is, whether that's buying your first home, investing in a property. Keaton, any last plugs you want to put in? Anything you need help with over there? Anything specific you're looking for that the viewers might be able to help you out with?
So I'm actually building out a website for some of that stuff pretty shortly because there's a few like national recognition things that we're going to be involved in later in the year. So we're building out a website for that. So we've lately I've learned how important because I've been on some podcasts recently and people are like, how do they get a hold of you? And it's like, we'll build that. I've just been done.
Do you have a LinkedIn profile these guys can find you on?
Yeah, on LinkedIn, super easy to find. On Facebook, if you just Google that or Schultz Real Estate, easy to find. On really all this stuff, if you just Google my last name, SCHULTZ, it's super easy to find.
Yeah, and guys, his name's here right on his image here. So it's Keaton Schultz out of Wisconsin. LinkedIn profile if you want to reach out. Keaton, thanks. Good to see you. Thanks. Yeah. Thanks for helping us out here today. And yeah, I'd love to have you on maybe in 6 months or a year from now and do this again.
Let's do it.
Awesome. Hey, thanks. And have a great weekend, man. And everyone else, have a great weekend. Thanks for being on. And we'll see you same time, same place next week. Thanks. See you, Keaton. Yep.